when you can own the bank experience and you can save anywhere from 7 to 30 basis points, that starts adding up to a significant amount of money.
I'm Adam West. I'm industry news editor for cardrates.com. I'm here today with Rouzbeh Rotabi, the chief operating officer at Qolo. We're going to be talking about a few different topics, but the biggest one is we're seeing a lot of activity with Fintechs chasing after these banking charters. And we kind of are just wanting to know, what's behind that, what it means, what's behind the timing of this as well. So let's start getting into it. First of all, Rouzbeh, thank you for joining us.
Hey, Adam, great to see you again. And I'm excited to dive into a very, very hot topic that's probably been through a few different generational life cycles since the fintech days of 2000.
I want to start off just with, maybe it's a bit of a softball, but I just want to hear a little bit about Qolo itself, what your team does and why you were interested in this subject.
Great question. So I've been in and around payments since 2003. I was an accountant out of college. Wasn't for me. I went into sales for the largest payroll company in the planet called ADP. And then I lived in San Francisco at the time, but I stayed away from all the SaaS and internet startups. In 2003, I got into fintech payments by name of a company called Wildcard Systems. We were the first modern card issuer that issued Visa, MasterCard, Discover debit cards and credit cards. And so we built the business up and we sold it. And I was hooked on the life of a startup, the speed, the tenacity, and everything else. The reason I'm here is it's full circle. On the first day, I met a woman by the name of Patricia Montesi. She was on the account management side. I was on the business development side. We went through orientation together. She started Qolo in 2019. And the thesis of Qolo is real simple. For many, many years, people were creating point solutions. And what we mean by point solutions, it's an ACH rail, it's an RTP rail, it's a card issuer. They weren't connecting that to the ledger. They weren't connecting that back into the end system, as we call it, payments infrastructure. We sell plumbing and electrical to a variety of fintechs and banks. And the problem being solved was unifying money movement, ACH, RTP wire, cards, Visa, MasterCard, debit cards, credit cards, etc., and then a ledger where you can have a system of record, track, tag, and move all the money. So they started in 2019. I joined in 23, and we've been off and running, and we sell into two channels primarily, B2B fintech, and then the top 100 commercial banks in the United States.
Great. Yeah, it sounds like you're well positioned for this conversation. So I appreciate your time on this. Let's dive into some of these questions that I want to go through today. So, the first one is, I guess it's like a timing question. Why are fintechs and crypto firms applying for bank charters in seemingly higher numbers, especially right now? I suspect it has something to do with the Genius Act.
Definitely has something to do with the Genius Act. I think there's two other aspects. One is the administration as a whole. Before, holding bank charters were for a select few. Anecdotal story, for 15 years in a row, Walmart applied to get a bank charter and the regulators did not let them. They didn't want a retailer to become a bank because of what it could do to the banking industry. So what you're seeing now is you're seeing a different perspective in the administration, put all the other stuff that you hear in the news aside. The second thing is that you have a lot of fintechs that have scaled. You have a firm applying for one. You have Square Block getting their industrial charter a few years back. When you get to billions and billions and hundreds of billions of dollars in volume, and you can own the bank experience and you can save anywhere from 7 to 30 basis points, that starts adding up to a significant amount of money. The
Mhm.
speed to market, the ability to adapt your card, your product, your rail also helps. So you're not going to a third party and asking for permission and then getting governance control and then getting compliance to sign off and launching. So it's three things, as you said, the Genius Act, the administration, and also the scale and size of the companies applying for these.
Yeah, yeah. I think you're definitely spot on with the administration aspect. I mean, we've been seeing so much deregulation over the past year, and it seems like a lot of companies are recognizing a bit more of a willingness to grant these banking charters. Well, one thing I want to ask is, because this is such a recent trend, is what could go right with this, and what could go wrong with this trend?
What could go wrong? Let's start there. Compliance, the underestimation of what you have to do as a fintech. Qolo, we operate as a program manager. So if a B2B fintech that does corporate payables or accounts payable comes to us and says, hey, I want to issue cards. I need you to run the program. I need your technology, but I want to be the program manager. Let's say they're a supplier company. They're moving bathroom supplies and they need embedded finance. They're probably not well positioned to do the financial regulatory compliance aspect of it. So many times it becomes unknown and the unknown says, oh, I can do it because it's easy. The other thing that can go wrong is it can affect the bigger business. So when I was at Green Dot, we actually had Green Dot Corp and Green Dot Bank. We were two separate
Mm,
entities.
yeah.
And the reason was it was to make sure that it was bifurcated and arm's length transactions. What can go right? Speed to market. If you want to change a user experience, if you want to, a firm wants to come up with a pay in two product, if Block wants to launch a new debit card that's got certain features on it, they don't have to go to a third party bank. They don't have to go to their processor. They can tell the bank what to build because it's in house. Then they can build the right end experience and the APIs with their technology partners.
Let's go into the next topic, which is, what you see as the impact with, so many new players, seeking banking charters and, many of them probably getting it.
I think what will happen is the ones that are steeped in payments, are steeped in fintech, and understand the nuances, they'll start accelerating their growth. I do think that you'll get a couple that step into it, think it's a little bit lighter of work, and then they'll slow their business down eventually. But I do think that there's perfect examples. Square's done it, Green Dot's done it. There's a few folks that have really done it well. If you go back 50 years, Capital One started as a credit only bank. They've recently got into the debit card, checking accounts, et cetera. But I think it matters if you have, just like any net new product, if you have the expertise, if you have the knowledge and the customer base, you should always try to figure out what your supply chain is and how to maximize that or minimize
Yeah.
your risk.
Yeah. I guess another thing I was thinking about was just how it might impact cost on lending and credit cards. I think it makes sense that these companies are seeking more control, but when you have to balance that with compliance and risk, does that kind of change the equation?
It can. And I know that's a vague answer, but credit cards right now are going through a different set of theories, if you will. Credit cards in the US are traditionally geared around points, rewards, whether it's Capital One, Chase with the Sapphire, or Chase with the Ink business. There's many things that they come up with. I think what it'll pull at is what happens to things under 500 or under $1,000, because that's really where the fintechs play. They're not trying to get your everyday spend on every big purchase. If you're going to go buy new appliances for $25,000, the fintechs aren't really trying to step in that. If you look at where they're focused on, you got an $800 purchase, a $600 purchase, or if you've used Airbnb lately, there's all sorts of buy now, pay later options there where you can finance a vacation. So I'd say one's more lifestyle and one is more day-to-day use and top of wallet, as they would say. So I think that's where you're going to see the difference between a credit card and the fintechs. Now, how it's going to affect the credit cards, they're losing all that spend. If I go to Airbnb and I book a $4,000 trip and I can pay $1,000 plus some nominal interest for the next 4 months, I might do that. Whereas before I might put on my credit card. So I think the credit card companies will eventually have to get much better about managing their interest rate or their rewards points to make sure that people want to carry a balance if they're paying interest to offset the various fintech options that are out there. On the debit card side, whether it's Cash App or Chime or whoever, Chime's not a bank per se, but Green Dot is. I think it's about economies of scale because their interchange and their average, their consumer is in a different demographic. They're not buying a $4,000 vacation. It's used more their day-to-day bank account.
I think you've covered this a little bit, but what are the primary advantages of receiving a bank charter from your perspective?
I think the biggest one is speed to market. So one of the advantages, I worked at Green Dot right after they got their bank charter. I came in on the tail end of them. They bought it, First National Bank of Bonneville out of Utah, and you get to launch products faster. So as a technology company like Qolo, if we're partnering with someone that has their own bank charter and controls the end customer experience, we know we're going to get to market faster. It's an arm's length transaction, but we're going to be able to iterate and launch the product much more quickly. The other thing that you're going to be able to do is you're not going to have to create a lot of nuance around customers engagement. You'll have to follow all the rules and regs and applicable law. But when you have the bank charter and you have the marketing tools, you can blend them well together to either upsell products, to cross sell different products. You can market in a different way because you get to create your risk tolerance of how often you email the person or what you can gather or what you can't gather from the person. And I think that's really helpful. And if you put it all under one ecosystem, it's pretty neat.
With more fintechs, more crypto companies seeking banking charters or digital banking charters, I know those are different things, but have similar reasons behind them. But do you see this trend affecting banks' willingness to partner with fintechs, or maybe it might impact like the M&A space?
A great question. I think that the bigger banks are already figuring out a way to leverage fintechs to be additive. So if you think about a bank, their limitation is their legacy technology. Most of them run on 40 or 50-year-old core platforms provided by one of the legacy providers because they do that job really well. One of our prospects and hopefully soon to be customers that we were talking to said that in 10 years, 5 to 10 years, they envision their core banking platform just to be a debit and credit system. It doesn't do treasury management. It doesn't do cash management. It doesn't do virtual accounts. It doesn't do cards. And you go get the best pieces of those and you attach it to the core because the cores are starting to build APIs into it. So I do think that you're going to have a full circle moment on that side of it where the technology is the limiting factor, not the bank charter. So banks that partner with fintechs will definitely move faster. Now, if you're JP Morgan, if you're Citibank, you have an army of payments people, you have a big deep group in product. You can create those things, but your limiting factor is either the homegrown system you've built, the core legacy system that you're running, or something you've built on top of it. Either way, it's not built in a modern API cloud native way that most of the fintechs have been created in the last 15 to 20 years.
And finally, Rouzbeh, I always like to kind of finish my interviews just by opening the floor, seeing if there's anything that we, haven't really covered on this call that you think would be relevant to the story.
Yeah, I think there's one thing that I'd like to discuss on the crypto side. It's very different. The crypto folks partnering with banks because they're going from fiat to a cryptocurrency, they don't have a bank per se that can store those tokens. They store them either digitally on their ledger or they hold some sort of asset and some sort of key that sits inside their system. So I think they will always be, I don't want to say reliant or dependent, but they will always be in partnership with a variety of banks, whether that's Coinbase, Kraken, you could go down the list. I do think that if people in the audience, I do think that it's time for people to understand that the biggest change is going to be the people in the office. In B2B payments, the office of the CFO is changing drastically. Before it was folks like me, went to school, studied accounting, became an accountant, became a CPA, worked at a firm, and then became a CFO. Now what you're seeing is a lot of people coming in through finance or strategic planning, and they understand the finance component. What they're going to look for is modern tools, modern services, modern solutions. And that's where I think the intersection of banking, fintech, and the actual customer being the bank or the fintech is changing. Because we all know that all of us, all humans are moving more digital. I love that I see the guitars behind you. But I think if you think about it, most kids nowadays, they don't have garage bands. They have garage DJs. They don't play street games. They're playing video games or virtual games. So the consumer's changing. The technology has to change to meet them where they're at. The same thing is applicable in business. The bank's technology is going to run out. The fintech's technology is going to hit a terminal velocity, as we call it. And I think you're going to see a aha moment that banks should partner with fintechs. Some people should get bank charters to control their own end result and experience. And there'll be a lot of change in the next 4 to 6 years is our prediction.
Great. Well, I think that's all we had for today. Rouzbeh, thank you again for joining us and providing us with your perspectives.
Thank you, Adam.